In 1911, the United States Supreme Court ruled that the Standard Oil Company must be dissolved and split into 34 companies. 88 years later, two descendants of the Standard Oil Company merged as ExxonMobil in hopes of recreating the glory days of John D. Rockefeller's Standard Oil Company. In 1904, Ida M. Tarbell published an expose on the monopoly of John D. Rockefeller in her book The History of Standard Oil Company. It sparked a public outcry for the government to take action against the company. After it was determined that the company was guilty of monopolizing the petroleum industry, the Supreme Court ruled that it be divided into 34 smaller companies. Jersey Standard and Saucony were two of these smaller companies that would become each other's toughest competitors before the merger. Jersey Standard will soon be known as Exxon, while Saucony will eventually become Mobil. Why did these two descendants of Standard Oil Company merge, and should we be concerned about monopolies in the petroleum industry? Following the split, Jersey Standard and Saucony established their own empires in the industry, both of which grew significantly. Both had advantages and disadvantages. What one had, the other lacked. As a result, while Jersey Standard owned oil production in refineries, it lacked a marketing network. While Saucony had no manufacturing operations, it did have refining and marketing assets. From the beginning, it seems that they have been meant to merge again in the future. In 1931, Saucony merged with Vacuum Oil Company and formed Saucony Vacuum. In 1933, Jersey Standard and Saucony Vacuum merged their interests in the Asia-Pacific region into a 50-50 joint venture. Then in 1948, both acquired interests in the Arab Oil Company or Aramco, which is a petroleum and natural gas company based in Saudi Arabia. In 1955, Saucony Vacuum became Saucony Mobil Oil Company, and in 1966, it became the Mobil Oil Corporation. While in 1972, Jersey Standard became Exxon Corporation. 10 years before the merger, the Exxon Valdez oil tanker struck Bligh Reef. Bligh Reef is a well-known navigational hazard in Alaska's Prince William Sound. More than 11 million gallons of crude oil were spilled as a result of the collision. It was one of the worst environmental disasters in US history, with a failed cleanup that killed hundreds of thousands of seabirds, otters, seals, and whales. Exxon and Mobil signed a $73.7 billion merger agreement in 1998, forming a new company called ExxonMobil Corporation. Exxon was the world's largest energy company prior to the merger, while Mobil was the second largest oil and gas company in the United States, making the merger the largest corporate merger at the time. Before the merger was approved, environmentalists and consumer groups protested, concerned that the merger would fuel a symbol of monopoly and business greed. Both companies were once part of Standard Oil, and merging is similar to reassembling Standard Oil, which was the main concern of the consumer groups. Environmental groups opposed the merger because of the disaster caused by the Exxon Valdez oil spill. But Mobil and Exxon officials promised that they would keep environmental and health concerns as their top priorities. The merger was approved by the European Commission in September 1999 and by the United States Federal Trade Commission in November 1999. Because of rising oil prices, ExxonMobil's stock price increased in 2005. As a result, by the end of 2005, it had reported a profit of $36 billion in annual income, a 42% increase over the previous year. In 2020, ExxonMobil considered a merger with their rival Chevron Corporation. It was during the time when the oil demand was down because of COVID-19. Had the merger happened, they would have been the second biggest oil company in the world with combined revenue of more than $275 billion. At the present, ExxonMobil is the largest and most profitable oil and gas company in the US and one of the largest companies in the world. For the second quarter of 2022, ExxonMobil posted a net income of $17.9 billion because of soaring oil and gas prices. The total revenue soared from $67.7 billion to $115.68 billion. Should we be concerned that ExxonMobil will control the petroleum industry in the same way that Standard Oil Corporation did? The answer is no, because ExxonMobil has no influence over oil prices. ExxonMobil produces less than 3% of the world's oil and had to sell oil for less than it cost to produce it in 2020, resulting in a $22.4 billion loss. What do you think of reviving the Standard Oil company through the merger of Exxon and Mobil? Let us know in the comments.